In this very brief video, we're going to talk about what the periodic system looks like, and then we'll compare that side by side with the perpetual system so that you can see the difference. So remember the perpetual system. When we purchase, or excuse me, when we sell items, we're going to have two entries that we're going to make. The first entry is going to address the sale, so we're going to have our sales, and whether it's accounts receivable or cash that we get for that, whatever that is. That second entry is going to be our cost of goods sold and merchandise inventory. So here, for example, it's showing, let's see, we've got our initial purchase of merchandise, and then over here on the periodic system, this is going to be very similar from the standpoint of when we purchase the merchandise. Where it will begin to look different is when we're dealing with the sale of it. So we buy the merchandise. Under the perpetual system, it's going into merchandise inventory. Under the periodic system, it's going into an account called purchases. It is still in accounts payable. We're still going to owe it on both sides. When, let's see, when we have discounts, the periodic system, this is assuming that we're going to pay on the early pay discount. We're still going to reduce our accounts payable by the entire amount owed, but under the periodic system, the discount's going to go into an account called purchase discounts, and then the cash, of course, will be the same. The discount on the perpetual system goes into the merchandise inventory. Then we actually pay for this stuff if we don't take the discount, and those entries look exactly the same. So it's still going to be reducing the accounts payable and reducing the cash. And what did we do? Did we have an allowance for some items? And these are the transactions that we reviewed on the other video, but I'm not going to flip back to them. But this is some sort of an allowance that we have. And so under the perpetual system, that's going to reduce merchandise inventory. Under the periodic system, it's going to go into purchase returns and allowances. Similarly, this was either another return or a discount that we got, or I shouldn't say discount, an allowance for something that was either defective or something. But notice that we're using the same account, whether it is a defective item that we're receiving a reduction for or an item that we're returning. It's going straight into purchase returns and allowances. Unlike the perpetual system where we're going to take it out of our merchandise inventory. And then lastly, when we go to pay for the shipping on this, we're going to have what's called a transportation in under the periodic system, whereas under the perpetual system, it's just going to become part of our merchandise. And when we go to make sales, as I said, we've got two entries under the perpetual system. We've got our accounts receivable and our sale, but then we have the sort of the two-step, the cost of goods sold and the merchandise inventory. Whereas on the periodic system, all we're worried about is the sale. We're not even bothering with the inventory till we get to the end of the accounting period, and then we go out and figure out what we've got in the warehouse. So in a return, we don't have to worry about the actual item being returned under the periodic system because we never actually took it out of inventory when we sold it in the first place. We just deal with the transfer of cash back to the customer. And then, yeah, similarly, yeah, when stuff's returned, looks just the same. Now when we go to make our adjusting entries, however, we do need to, under the periodic system, make an adjustment because now we need to go out and figure out, okay, what's left in the warehouse? What did we start with? What did we buy? Okay, the difference between those numbers must be what we sold. So we're going to need to make some adjusting entries to account for those. And then here are the closing entries side by side on the perpetual as well as the periodic system. And so that will go into our, that's how we will make those inventory adjustments, and then ultimately it will all wind up in owner's capital, just regardless of the system that we're using, perpetual or periodic, when we get to the end of the closing entries. And that concludes this, sorry, really brief video, but I'm getting hungry and my throat hurts from talking so much. See you in the next chapter.